Welcome to another Coffee with Samso. We're here at the University Club here in Crawley on the University of Western Australia campus. And I've got Heavy Rare Earths Limited here with us. The ASX code is HRE. Market cap is 7 million as we speak, and a share price of about 9.5 cents. Richard Brescianini, did I get that right?
That's it.
Is the managing director, and Richard is a geophysicist from University of Tasmania. Worked as a geologist in 1987 was his career start with BHP, and then worked a stint with the mines department in the Northern Territory, and then Arafura, where he cut his teeth in rare earths.
I did.
So Richard, welcome to Coffee with Samso.
Thanks very much, Noel.
Mate, I've been chasing you for a while, we all know, and you're probably the one person that's had the most experience in the rare earth industry that's in the clay sector, clay mineral sector, or alluvial rare earth sector, as I call it. But, mate, tell us about HRE.
HRE. When was HRE born? HRE was born in about February of 2022. And listed in August of 2022. We have a project, our main project is down near Esperance called Carolinia, and have a second project in the Territory as well. Company is very focused on rare earths. It's a decision by HRE to focus on rare earths. That's not to say that other opportunities have popped up, but really we believe very strongly in that sector. As you can tell by the name, Heavy Rare Earths, which is a coup in itself, getting a name like that. And I was introduced to what they had as an organisation in the latter part of 2021, and came on board as a director in February of 2022. As I said earlier, listed in August of 2022, and here we are today, almost a year later, having done a hell of a lot of work on our main project and just about to launch into field work for our second listed project as well. So it's been quite a journey and a very enjoyable one, I've got to say.
So from the Met point of view, how does HRE stack up? I mean, I've seen some figures on your presentation. If you can go through that with us and give us, what is the HRE advantage there? Yeah,
we have a couple of slides in a presentation that I understand are going to be part of this interview, and I'd ask the viewers to concentrate on a table that we put out there, which is all around what happens with our feed coming into, we'd consider to be a plant, of course. You see a feed grade, you then see an upgrade on the feed, and that's because we've been able to identify that our rare earths at Carolinia are primarily hosted in the sub 25 micron fraction, so in quite fine silt to clay sized material. Okay, so that was the first thing that we did in the latter part of 2022. We already had the advantage coming to market with a modest resource, but as important as the resource was, it was actually being able to access material straight out of the ground in reasonable quantities to start a metallurgical program from day one, which is what we did. And the first work that we did in metallurgy was particle size analysis. As I said, that showed that we had most of our rare earths, plus 80% of our rare earths, hosted in the sub 25 micron fraction. And in being able to isolate that material, we found that we could get a twofold grade increase, which is a good place to start. We'd like that to be even higher. We'll do some optimization work around that over time, but that's a good place to start. A twofold increase in grade. So when investors look at our grades, they should be doubling them, because really that's what's going to hit acid leach, is a doubling of the grade that you see in the ground, roughly, okay? So that was a good start. From that point onwards, again, we can refer to that table in the presentation. We then go into an acid leach. And what our diagnostic leaches have shown us is that, I should go back a step. Not only do we double the grade in our sizing, but we achieve that with around 43% of the ore feed. Okay, so that means that 60-odd% of the material in the ground never reaches the plant. so that our reagent costs downstream are going to be lower because you're not treating as much material. So that was also a key finding. Once that material, that sized material, that sub 25 micron material hits acid leach, and for us it's all around hydrochloric acid. We've tested other reagents. They do not extract the rare earths as well as hydrochloric acid does. We weren't surprised by that because a little bit of test work that was done when the company was private had already demonstrated that hydrochloric acid had really, really good leach characteristics for our material. We found then that an average of around, again, in excess of 80% of our magnet rare earths, that's neodymium, praseodymium, terbium, dysprosium, the stuff that you get paid for, everything else you don't get paid for, came through into solution. So that's really strong. We're trying to maximise the amount of rare earths coming through the process to maximise our revenues. Okay, so keep those revenues nice and high. And in addition to the 80+% coming through into solution, we consumed an average of 18 kilograms of hydrochloric acid per tonne of fines material. A very low number, a very low number. And that's really key on the cost side of the business, of course, because in a rare earth project, one of the key cost drivers is the consumption of your main reagents. In our case, it's going to be hydrochloric acid, and then probably caustic soda later in the process. So we're trying to keep those numbers as low as possible. Low cost, keep those consumptions down. High revenues, keep the extractions up as high as possible. So we're not going to muck around and go back to other reagents that might be lower cost than hydrochloric acid when we're not achieving as high extractions. Okay, so that's going to be a balancing act, but we've already made the call internally. Hydrochloric acid is where we're going to continue to develop our process, and we think that's going to deliver the best revenues possible for our particular project. So we're now at that point where we've demonstrated that that particular leach is best for us. We now need to optimize those leach conditions. That work has started, and then we'll see where we land with that. And we've got a couple of other metallurgical programs underway because all of the results that I've just described has been on 13 samples, 13 composites, 8 of which performed very, very well, which is really where you want to be in terms of low acid consumption and high recoveries of rare earths. Once those two things are satisfied, we say that's plant feed. And all other material, one or the other, if only one or the other of those is going to be in the zone that we want it, that's not plant feed material, because we're either going to be consuming too much acid or seeing too low a recovery. So 8 of the 13 samples worked very well. We've just gone out and collected another 112 samples for more diagnostic leaching work. First of all, particle size analysis followed by diagnostic leaching. So that'll tell us how widespread we've been able to determine our best conditions for metallurgical processing. So that's work that's also commencing. And then the third thing that we're doing is we are looking at producing mixed rare earth carbonate samples from our material sitting in the ground, from some of these samples that have worked very, very well in that table. We're compositing those and bringing it all the way through impurity removal to produce samples of mixed rare earth carbonate, so we can put those samples in front of refiners to begin the qualification process for our material. So that's also happening at the same time as those other 2 metallurgical work streams, so that we can begin to demonstrate to the market we can actually produce something from the material that's sitting in the ground. The only question that will remain is, can you do it economically, which is really all around those other 2 work streams. You know, how much more can we optimize the leach process at our sizing? And secondly, how widespread in our mineralization, in our deposit, have we got the right sorts of conditions? So that's a process that we're going through at the moment.
How much control of, obviously, the grade? I mean, I see as well, like your recent drilling, the grades, 1200, 3100. How much of that do you think is controlled by the geology? Because we spoke off air about the type of host rocks that you have. As I said, I've talked to many people. There's the granitic type ones, and then there's the AR3 has limestone. I think I don't think of anyone else I know of sits in that. And then there's another one that sits over in a fimbolite, which is, I think, your neighbor, West Cobar Metals. Can you go through that for us? What styles you have, and do you think they can upgrade what you have?
We have a mixture, from what we can see, of protoliths sitting in the on our ground position. We haven't yet determined with any degree of confidence as to whether granodiorite, granites, granitic material versus amphibolites, other mafic material yields the best grades, the best upgrades in our sizing, the best leach characteristics. So there's a bunch of parameters at play here to try and determine whether one protolith is better than another protolith. And I should also add that it may not just be protolith that is the protolith type that is giving us our particular upgrade in rare earths in saprolite. Obviously, that's where it's going to be sourced from. There might also be groundwater movement involved as well. We're also looking at the possibility of certain channels sitting in our ground position that have the potential to further upgrade the rare earths. So there's a whole bunch of factors at play here, which is not yet driving exactly where we go and look for more of them on our ground position, but we'll have to factor quite heavily in the future. I'm more interested, or as interested right now, in understanding the mineralogy. Okay, so we've got a project that we're sponsoring through Merriwa that RSC are undertaking right now. I think it's called the Characteristics of Clay Host Deposits in Western Australia. So we've just after this interview, actually, I'm going to be dropping some samples off to them. So we've started that process in mineralogy as well. We've done some previous mineralogy too, so there's some clues there. But really, I'm driven by the numbers at the end of the day, Noel. I want to know what is it, not so much what is it. It's all about where's my lowest cost material insofar as process is concerned, where are the highest recovery ones insofar as the revenue side is concerned. Is that controlled by the geology? Possibly. That's something that we are trying to work with at the moment. I don't have a simple answer to say that mafic is better than felsic material at this point in time. Whether possible paleo channels are, whether that's upgrading material better, I don't have a definitive answer on that. I might also say that when it comes to the type deposits in China, I mean, there's quite a varied protolith there as well when you start looking in detail. It's not just granitic material. Most of it is like that, but there's also mafic material that has some high upgrades for rare earths, even in the Chinese examples. And so you pointed to WC1. We also have some of that material too. So don't have a simple answer on it yet. We're grappling with it. We'll try and get to the bottom of it. We'll try and map it out as best we can for the next drilling campaign, which I might add is unlikely to happen anytime soon until we have our mineral resource upgrade out there, and also the next phase of metallurgical process test work to be able to justify further drilling on the project. So at the earliest, that'll be next year.
The clay rare earth sector is sort of buzz with sort of activities and results, and that coupled with that comes with understanding of what it really means. At this stage, the maturity of the understanding, I feel, and for those guys that have sort of been following conversation in Samso, is that it's all about the lab now. It's about the recoveries and things like that. And I will go further. It's not about being ionic or non-ionic, and we've had varied discussions. It's really a balancing act between all the factors that are required to make the processing work. How do you think that is? Do you think we've got this on song, or do we need to all go back to grade school and start again?
I don't know if we need to go back to grade school to start again, but look, as with every project in our sector, not just rare earths, it's about economics, right? So this is the way I like to think about it. When our project was first introduced to me, And at that point in time, the company, as it was privately, had drilled 100 odd holes. And I took a look at the results, and as you said earlier, I'd come from a background out of Arafura, hard rock. So my thinking was all around hard rock at that particular point in time. I'd run a consultancy for about 9 months at that point, seen a lot of other projects as well, rare earth projects as well. So I looked at the grade to begin with of HRE's project, and I thought, holy hell, how can you make money out of several hundred parts per million to a couple of thousand parts per million of rare earths in the ground, Having come from a background where we're looking at tens of thousands of % in the ground, which is hard enough to make money from. So, I had to sort of step back and say, I really need to think this through if I come to the position where I think these can happen. And of course they can happen, because the Chinese have been commercialising clay-hosted rare earths for quite some time, and there are a couple of others out there around the world that are getting there as well. So that's the first thing, is that the first thoughts to me when I looked at these projects was it's all around economics. How can you make money out of this? And it took me a while to sort of get there, to be perfectly honest, and having chats with guys inside of HRE, I really had to make that point early on, is that it's all great to talk about, they might be cheaper to mine and this and that and the other, but you're already starting with a pretty low grade. And it's not just us, it's all the guys in the clay-hosted space, whether it's a couple of thousand ppm or 500 ppm in the ground. It's going to be a challenge to make money out of it in Australia, compared to the Chinese, of course, who have, much tighter cost controls. There's a whole lot of advantages of doing that type of project in China, and they're advantages that we can't capitalise on in Australia for obvious reasons: lower labour costs, less environmental controls, all those sorts of things that can make it easier to commercialise a clay-hosted project in China. So I don't think we need to go back to grade school, whether it's ionic, non-ionic, so on and so forth. We just got to think in terms of project economics, okay? And where I've arrived at today with heavy rare earths is that I think there's a real opportunity to begin to look at the commercialisation of it. It's not just about what's drilling in the ground. It is as much to do with what's in the ground as it is in the lab, as you point out. Absolutely, because you've got to recover the rare earths as efficiently as possible at the lowest possible price. And that's where I think we've gotten to with HRE. And I think that that's what's going to play out over the next little while in the clay-hosted space in Australia, as people get more results in around metallurgy and begin to understand the cost drivers of these things. You'll probably see a few more step up and make themselves known to the market that these are a chance, and there'll be a whole bunch of others that won't make it. And that's just the reality of life in our sector, and nothing to be afraid of, but I think that's just where the market is, and it's catching on very, very quickly, I would say.
I mean, from your experience, as you said, when you were Arafura, you're dealing with, percentages.
Yep.
Right? And we're talking a lot less here. And you look at the economics, as you've pointed out. I look at, as I've learned over time, happy to be corrected. When I look at it and people say, these guys are not ionic, these guys will never work, these guys are this. Now I've heard those comments, although I might be back in the day, thought, yeah, okay, they're right. But now I'm thinking, I don't think those are factors. I don't think, they are important factors, but I don't think they are deal breakers, because, as you said, the economics is all about what comes out at the end. Is that a fair way to think?
I think it is. It's all about recoverable rare earths, not about what's sitting in the ground. When you want to do your project economics around these things, it's all about the recoverable rare earths. So when I see comparisons between projects on EV per tonne sitting in the ground, I just kind of put that aside and not even worry about it. It's all about recoverable rare earths, and most of the projects haven't gotten to the point where they can begin to enunciate the recoverable amount of their rare earths. So you start with something in the clay-hosted space that's going to have to be very large because of the grades that you're starting with. So the throughput's going to have to be large. Might be of the order of 5 to 10 million tonnes per annum through a mill, okay? You have to hopefully upgrade those rare earths in a physical way with us at screening and cyclones. You then have to go through some sort of leach process. There's going to be some rare earth losses along the way there because you won't recover 100%. Then you're going to have to go through an impurity removal stage. Won't be 100%, so a few more rare earths drop away, okay? And all the way along, you're getting a lower and lower number towards the end, and really that's where the rubber hits the road at the end, is how much have you recovered from what's sitting in the ground. Now, very few, if any, are at that point in Australia right now, at least from what I can see out there. Not enough organisations have gotten to that end point where you're producing a mixed rare earth carbonate product, for example. You can then begin to tell people, well, what's the actual recoverable rare earths, okay? And remember, you're starting with a low number to begin with. So when you're starting with a higher number to begin with and you get those same rare earth losses, you're going to end up with a high number at the end, okay? Although the cost structures are going to be different along the way. That's the advantage we might have in clay host space, where there are no mining costs, all the things that people talk about. No mining costs at the start, but you have to work harder in those middle stages as well, because you're starting with lower grade to begin with, okay? So again, it all comes back to project economics and what your recoverable rare earths are at the end. And we are now rapidly getting towards that point at HRE, and I'd say there's a bunch of others doing exactly the same thing as well. AR3 being one. IXR overseas have already got a scoping study out. I think they're moving into feasibility at the moment, and you've got a couple sitting in South America who are also at that point. So you're beginning to see what sort of project economics there are around these sorts of things, because you certainly can't rely on the ones that the Chinese put out there, if you can find any at all, given that, one, you don't necessarily trust the numbers, and secondly, well, they do things a completely different way over there. Their cost structures are much, much lower. So the comparison with Chinese deposits is silly on the project economic front. Having said that, though, you're going to have to compete in the market. If you want to get to market and sell product, they're your main competition as it currently stands today, and that's not likely to change rapidly for the foreseeable future.
Is there a game changer component in the clay sector? Is there a game-changing, in your opinion, or what? We had this discussion that everyone's learning it as we go. And at this point in time, do you see a game-changer factor, point, element, thought?
Do I see a game changer? Nothing specific at this point in time. There's a lot of projects, as we spoke about earlier before the interview, popping up around the country. There are a few popping up elsewhere in the world that seem to be getting there as well. The Sierra Verde in Brazil is about to go into production. We've got a Clara sitting in Chile, trying to get there as well. IXR in Uganda. So there's a few popping up that are trying to come into production. I think that in Australia, I suspect, given the challenging project economics around these things, I suspect it might be advantageous if you have a few projects that are clustered. And the reason why I say that is because if you can demonstrate that a few projects in a particular area have similar characteristics in relation to metallurgical treatment, for example, then you might be able to build a case collectively in a particular area where you might invite in an acid producer, for example, or other infrastructure providers, where clearly there's going to be more than one customer for a reagent, or more than one customer for water, power, so on and so forth. And then you might have an opportunity then to convince state and federal governments to begin to underwrite some of those investments, because I just don't think that in the clay hosted space that projects are going to be able to go on their own. So I suspect there might be an opportunity awaiting projects that can sort of cluster together, notwithstanding some of the challenges around different commercial imperatives and so on, to be able to help underwrite some of the infrastructure around the development of these projects. Because I come back to it, you're starting off with pretty low grade in the ground, and so it just makes those economics challenging, particularly when you are competing against tens of thousands of ppm from the hard rock producers, and of course the clay hosted guys in China are going to have a very, very low cost base. So there's going to have to be, I guess, some level of cooperation between players, and it'll be an advantage if you're all located in the same area.
I mean, that Esperance area where you guys are in WA, I coined that this could be the clay area of region of the world, because you've got obviously good grades, good volume, in one place. You've got a port that's easily expandable, access to that's there. How much do you think that is? How important is that in the scheme of things for you guys?
Could be very important. All of those things that you point out are true. It may be that all of us in that region will have very similar treatment regimes metallurgically. So then you can begin to think about bulk inputs of your key reagents and of other
Common
infrastructure.
plant, maybe?
Could be. I think it'll be an advantage to be in a particular area, and governments respond to that. They really do. I mean, I worked in government for 7 years myself, responding to ministers. At Arafura, I was heavily involved in critical mineral strategy with the Australian government as well. That's how they respond. They like to see the private sector begin to think about hubs and stuff like that. And as I say, despite some of the difficulties around that, I think that could help in, say, the Esperance district, maybe other districts around the country, that area on the South Australian Victorian border, where AR3 is and other players. That might be another hub that could emerge. Who knows? We'll see. I'd say that it would be much more difficult if you're a player sort of sitting somewhere out there by yourself, and even if you've got reasonable grade in the ground and some of your metallurgy works pretty well, if you're out there by yourself, it might be a real challenge, because they're still going at the throughputs necessary to make an amount of rare earths where you'll get the notice of customers, refiners. There's going to be some costs involved in being able to do that by yourself. If you can share some of those costs, it'd be very, very helpful. And I just come back to that point. The throughput of these projects is necessarily going to be large because of the grade characteristics to begin with. And because of those grade characteristics and the recoveries, which do drop all the way along the process, that's just what happens. In order to make a reasonable amount of magnet rare earths, and usually that's only 25% of the mix, up to 25% of the mix, even if it's only 30% of the mix. In order to make a reasonable amount that's going to make an impression on the market, an impression with customers who might be prepared to step in and provide you with some assistance in funding, certainly with offtake agreements to be able to underpin your debt, you're going to have to make a reasonable amount of rare earths to get noticed. You can't just make 200 tonnes of rare earths and then expect that people are going to line up wanting that 200 tonnes, unless the entire 200 tonnes is dysprosium and terbium. But that's going to be a rarity. That's not going to happen easily. So I think at the end of the day, if you're out there by yourself, you're not going to be able to produce enough rare earths to get noticed. And if you're out there by yourself, it's going to be quite a challenge to both raise money and also to fund the infrastructure development that's going to be necessary to run a rare earth project. If you can do it collectively, there might be better opportunities for you.
When you look at the amount of resource, I mean, OD6 came up with 344 million tonnes, etc. And I'm pretty sure a lot of these guys in time will come up, yourself included. Where do you think the future demand could come from? I mean, you come half a billion tons of this stuff on the market. What is the market? Where do you see the future demand? Is there an increase? I know that electric cars, etc., but is that enough for this industry to have?
If you look at the market commentators, there's a whole bunch of studies sitting out there that talk about not just rare earths, but a whole bunch of metals that are going to require several-fold increases of supply to be able to meet the projected demand around electrification of the transport sector and of the power sector and all those sorts of things. Okay, so Look, you can accept that for what it is, and I guess I do. When you sort of look at the numbers, they kind of spin your head out. Okay, and that includes for rare earths as well. So there's already a pretty solid foundation to be able to say that, you know, for rare earths, yeah, there's going to be a lot of demand coming, but a lot of it will come out of China. So we should never forget that they're still going to be occupying a large part of the market in terms of demand. The demand elsewhere is growing rapidly, of course. You know, the Europeans produce a lot of electric vehicles. The US are really starting to ramp up as well. Japan, Korea, and so on. So there's a large electric automotive, hybrid and battery electric automotive sector that's already emerging or, you know, really solid outside of China, but China seems to be growing the fastest. So we shouldn't forget that, because China may also be a market for rare earths that are produced by some of these projects. So you wouldn't be your first port of call, but you'd be, personally, I would like to see more go into the market outside of China. Putting that aside, when I started in rare earths all those years ago with Arafura, and I hadn't really thought too much about rare earths before Arafura, you know, we couldn't even dream of some of the applications that we're seeing from rare earths today. Okay, and that will change over time. You know, there'll be demand that pop in from other sectors. I'm not sure to the same extent as we're seeing from the electrification of transport and power. Don't know. I guess we'll find out over time, but there's a whole lot of stuff we haven't even thought about yet. One thing's for certain, you know, research and development will find new applications for rare earths. On the flip side, there'll be a whole bunch of people who are continuing to work on thrifting of rare earths out of applications. Okay, so there's going to be a counterbalance there. And then, of course, you've got a whole bunch of people who are wanting to recycle spent magnets to pull the rare earths out of there that go back into the sector. So that will, you know, perhaps dampen the supply a little bit from the mines that are trying to pop up around the world. Australia has a real opportunity, no question, in being a bigger player in rare earths through its hard rock sector, and I'd say emerging the clay-hosted space as well. We'll see how that plays out over the next little while. I'm pretty optimistic about it, and, you know, I'm determined for HRE to play a part in it.
I feel that the Esperance region, I use the Esperance region because I think it sounds like the most collectively advanced sector for clay rare earths. It's like your miniature Pilbara, where the boom of China 30 years ago was pretty much backed up to the hilt, whereas this new revolution that we're going through, the electrification of the world in the next 30, 50 years, decades to come, the backbone is mining, backbone is rare earths and lithium, and, you know, I think there's this play there. So if you had that as a scenario that was going to happen, what needs to go right for the likes of HRE, and what could go wrong for HRE? Because we know the world's not in a bed of roses, right? We've had enough grey hairs in there to know that. But so what needs to go right, and what could go wrong?
What needs to go right is already what's going right. And that's the demand is surging, okay, for all of the sorts of things we were talking about. So that's already going right. What is also going right is finally the Western world is awakening, and I'm saying outside of Japan here, who woke up to this 10 years ago in its support for Lynas, right, to get Lynas to where it is today, where essentially most of Lynas is rare earths. So I should say NdPr, TBDY goes to Japan, okay? Everything else kind of makes its way into China. So that's already going right insofar as the rest of the world waking up to the supply chain vulnerabilities that China represents in rare earths. And so there's a lot more incentive and real action being shown by Western governments in Europe, here in Australia, the US, Korea. Japan has already been showing that for the last 10 to 15 years, so you don't have to worry about the Japanese waking up about this. They know the rare earth sector, they know it very, very well. So that's happening, and that's helping all the rare earth players. the mere fact that investors are prepared to put money into the sector, which is what's been happening for the last 12 to 18 months, is a positive thing, because without that money, we're not going to get on and do our exploration to find the next generation of mines. So that's also a positive going on, okay? So there's investor awareness globally, including large investors, Hancock Mining, Fortescue have put money into rare earth projects, Hastings and Arafura, for example. So they're already getting busy in that sector as well. So it's bringing the right sort of money in. So that's all good. Little companies like ours, not yet. We've got to really show what we're capable of doing, but we're getting there. So they're all the things that are going right. Okay, what could go wrong? Well, that continuing control by the People's Republic of China, by the government of the People's Republic of China on the rare earths supply chain. The rest of the world is trying to break that down. It's very, very difficult because they've had 30 years to build the position that they are in today. And it's all around the production of magnets for electrification of transport and power sectors, right? That's really what we're talking about here. So to break that nexus, to break that control is an extremely difficult thing to do. It means that the Western world has got to build neodymium ion boron magnet production capacity outside of China, which is a real challenge. It's a real, real challenge. We can get a lot of supply into those projects, into magnet manufacturing, but the magnet manufacturing's got to be there. Otherwise, most of what we produce will end up in China, because that's where the end application is, the magnet application is. So I'd like to see more happen in that space, and there is some things happening in that space about magnet capacity outside of China, but the Chinese are working very hard to ensure that doesn't happen, because what they would like to see is more concentrates come into China. They've got spare refining capacity there, okay? It's all very, very controlled by the state. They encourage state-owned enterprises to compete against one another to keep costs down. And it's all about ensuring that the cost structure for the magnet manufacturers is as low as possible. So they don't want high input costs to that, such as high prices for rare earths. So there's control going on to keep rare earth prices down so it doesn't damage magnet manufacturing inside of China. So they invite as much concentrates to come in by not even subjecting them to their internal quotas. So bring as much as you like in to continue to feed us so that we maintain control over that supply chain. That's where the main challenge remains for the rest of us. And keeping prices down is, of course, bad news for all of us, because we're relying on high prices, all of us are relying on high prices, to be able to bring forward an economic case for funding of our projects. So that's what's kind of going on there. That's the bad news, is that China maintains a real strong control over the supply chain, which the West is awakened to now, and the way in which they do it through value-added taxes, all sorts of ways, quotas and so on. I don't think the Chinese are going to cut rare earth supply off. I don't think that's going to happen. They will continue to maintain control in many other ways to the detriment of projects being produced outside of China. Unless, of course, you want to put raw material supply into China, as is going on today from a bunch of mineral sands producers. Monazite's making its way to China from many parts of the world today. So that's, I think, the challenge that remains to be worked on, but at least we're awakened to that now, as distinct from 10 to 15 years ago when governments outside of China didn't even want to know about it, aside from Japan.
Do you think that with all that the negatives has always been there in the past? In your last little comments that there was no positives, whereas now the positives are growing, but the negative is it's not growing. It's actually shrinking, remaining or shrinking to some degree.
It's under pressure, certainly.
Yeah. So do you think that is the case today?
Yep. Yeah, I do. I mean, that's why you're now seeing, companies like HRE and others entering the market, because the positives are there. What the sector was lacking in the past, going back 10 to 15 years, was some reality around the market. I remember once upon a time, we would be trying to educate the market about the rare earths market. Where do these things go? What are they used for? Can you make money out of them? You know, those basics. Today, there's an acceptance that there is a market either there or emerging, okay, limited to just the magnet rare earths at this point in time. There might be other rare earths that begin to emerge from that. You know, other rare earths might make a better, more contribution in the future to project economics. At this point, they don't. So that strength in the market, the rare earths market, is now there. People can see the applications, people can see it growing. There isn't enough supply to be able to cater for the growth characteristics of the market. So that's the good news. I think that investors are convinced of that, governments are convinced of that, and are working hard to try and limit the control by the Chinese on that. So that's the really good news. And as I say, it allows companies like ours and many others to now enter the market at the exploration stage to try and be a participant in that market. None of us are yet, but we're all aiming to get there, of course. And at HRE, I'm now starting to see signs in our metallurgical development, particularly, that we could get there. And I wasn't really prepared to say that even as recently as 3 to 4 months ago, in the absence of the metallurgical results that have come through in July and earlier in December of last year. And I invite investors to go and take a look at those two market announcements, late December and July of this year, to understand the real important market announcements that we've made. On top of that, a market announcement we made in either early May or late April around the fact that we discovered rare earths up to 14 kilometres away from our main resource area. So that's now hopefully giving investors some optimism that the land position that we hold in the Carolinia region has the potential to host many, many hundreds of millions of tonnes of resources. Perhaps even up to 1 billion tonnes of resources, which is the sorts of numbers that are going to be required if you're going to have a long-term sustainable operation.
I think you're talking to, and I said, the value I think I've learned over the year and a half since the sort of clay rare earths popped its head out is that I've spoken to so many different people from different projects in hearing, and I find that the variability in the resource is there, whether you're a granitic source or not. But I think there must be something with the chemistry, because what I'm seeing with the West Cobar guys, which we see, or amphibolite mafic source hosts, call them hosts, must be doing something to give them extra grade and extra heavy rare earth content and things like that. Because I'm seeing that in your stuff, and I'm seeing the numbers there. I think, not to say that, I've got the crystal ball, but history repeats itself to some degree, right? And I think I can see the variability, and I think, this might be different, because there's another one I spoke to where their MREO was a lot, quoted at 33%, but they're on a different type again, more sediment style. So I'm pretty sure the host must have something. But anyway, that's just my 2 cents worth.
We do have variability. There's absolutely no question. Name a deposit that doesn't, or any description. They're all variable and so on. And we have some restricted intervals of 30, 40% magnet rare earths of our composition. Probably means that we've got some acid-resistant minerals sitting there, either monazite, xenotime, or something like that, which we're not going to be able to get access to anyway. Okay, because they won't leach. All right, so they'll be going back into the hole, unfortunately. But that's life. That's the 20% of the rare earths that you won't recover. Okay, using our processes, you might be able to recover it. In an ideal world, if you had much higher grade sitting in the ground, you'd recover those sorts of minerals with an acid bake, which is what the hard rock guys are doing. They might have a pre-leach. Arafura has a pre-leach. Linus doesn't. Hastings doesn't. They just have physical beneficiation, produce a 40% concentrate, 40+% concentrate going into a bake. That's what you need. They're the sorts of numbers that you need going into a bake. If a clay-hosted project talks about I don't think anyone would, but if they talk about recovery of rare earths using a bake, that's just nonsense. The clay hosted stuff will be recovered via ammonium sulfate desorption or an acid leach. They're really the only options that we have. But there is variability, absolutely some variability. We've got to try and get on top of that. I'm driven by numbers. Our average numbers of recovered rare earths at leach is 80+%. That's where I want to keep it. Whether it jumps around from 75 to 90, great, no problem. I would just want to keep it in those sorts of numbers so that we maximise our revenues. That's the name of the game.
I think that's the key. I think that's the takeaway, is that today, a while ago it was like, oh, this guy's can't acids, you don't use too much acid. But I think the understanding today is that by the time you beneficiate your stuff, which is what you guys are doing, and then, at the end of the day, it's plus and minus economics, and it works. It's not like, you're an ionic and you're not an ionic. I think that conversation's in the past. Do you agree with that?
I agree with that. The days of thinking, will this work, is not about whether the chemistry is going to deliver for you. The chemistry will deliver. The question is at what cost? That's the bottom line, isn't it? How much are you using, if your key reagents are you using to deliver your rare earths, right? If you have to use too much to deliver your rare earths, it ain't going to work, right? It's not about will the chemistry work. We know that the chemistry works when it relates to kaolinia. There are many others out there who are beginning to demonstrate that it works for them as well. The question is, how high can you make your revenues, right? And by the way, at what price do the magnet rare earths need to be able to generate the revenues that are necessary to be able to offset your costs? And the cost structure is all around minimising the amount of your key reagents in the clay hosted space. So that's what we're keeping our eye on in our optimisation work. That's really the bottom line for us. Everything else is kind of noise. Now, remember, we have to still bring forward an updated mineral resource estimate. We're currently at 28 million tonnes at 625 ppm. My expectation from the amount of drilling that we've done, around another 15,000 metres on top, or 14,500 metres on top of the original 1,000 metres that we brought to market in the beginning. I'm expecting a many-fold increase in tonnes, and I'm expecting a grade increase as well. Can't really quantify that. I have some back-of-the-envelope numbers, all non-JORC compliant, of course.
But perfectly to say it here.
I won't. As much as you'd like me to, I won't. But nevertheless, that's coming up in September. Those numbers are coming up in September. So between that and an exploration target that we'll bring forward as well, and that exploration target will be informed by far field drilling that we've done, and there's a map on the presentation that investors can go to. They'll see that we've drilled a whole bunch of holes on existing tracks. So informed by that information, and also some airborne electromagnetics that we haven't shown in the public domain, that were flown by previous operators. There are some lines across our tenement, some close space stuff in the areas that we've drilled most intensively, so that helped to guide some of our drilling in our resource area, and then some other flights that were made by previous explorers on much wider line spacing over the rest of our tenement. So that will help inform our exploration target, which hopefully will be a four-figure number, 1 billion tonnes or something, probably going to be in the hundreds of millions of tonnes. But we'll see what that pops out at. That's only part of the story. That's the part of the story that tells investors that we have the capacity to be able to build a large project. The other part of the story is all around economic viability, technical and commercial viability, and that's the metallurgical side of the business. When we listed, we said that we would like, within about a year of listing, to come up with a fairly definitive statement on both of those aspects. And I think it'll probably take us about 15 months instead of 12 months. So I think we're doing reasonably well in delivering what we thought that we could deliver within about a year of listing the company.
Okay, fantastic. Look, news flow for those guys out there. What can they be expecting?
So news flow is on kaolinia is all around updated mineral resources and an exploration target in the third quarter of this year. We're saying September. So I was on site last week with the competent person. see no reason to move that that time frame on my discussions with him. Beyond that, it's all around metallurgical announcements. So we've already told the market in our July statement that by the end of the year, we should have produced samples of mixed rare earth carbonate for customer assessment. So that program has started, and so we'll be delivering that, we believe, by the end of the year. So they're the main announcements around kaolin. On top of that, we are just about to launch into a first pass exploration on our Duke project in the Northern Territory, which is a hard rock, mainly a hard rock focused project, looking at the Browns Range style that people would be familiar with from Northern Minerals. There you have substantial enrichment in heavy rare earths, up to 6 to 10% of your mix, which is outstanding, very anomalous. So we're out there, we see some characteristics north of Tennant Creek that might have some prospects for Browns Range style vein-hosted deposits, unconformities related deposits. And on top of that, we also see some enrichment, or we see some characteristics of the Warrego granite up there, which is quite enriched in rare earths, never been looked at before for rare earths. And we also see some saprolite development in previous drilling, which has never been assayed for rare earths. So we see some possibilities there as well. Anyway, we're starting that project imminently on the ground, starting with a very substantial soil survey. So investors can expect to see perhaps some news coming out of that for the rest of the year. And finally, we have 2 projects that we disclosed in our quarterly report. 2 other rare earth projects, again, rare earth focused projects in Western Australia in the Midwest region. So they are going through the grant process right now. And again, in those 2 particular cases, we're looking at paleochannels. So yeah, we have a mixture of project types. The main one is still kaolin, we were most advanced, and we're showing the most promise insofar as a pathway towards a development.
Okay, fantastic. And I haven't asked guests to do this for a long time, but sell your soul in that couple of minutes. Why HRE?
We're focused, continue to be focused on a sector that has enormous growth characteristics, rare earths. So we're not departing from that, at least for the time being. We're certainly not departing from that. So projects that we're bringing in are going to be rare earth focused, okay? We have a project that I now am starting to see a potential pathway towards development, which is driven by the latest results that we have, the ongoing results, the ongoing work that's happening with Strategic Metallurgy here in Perth on the development of a metallurgical flow sheet. So we remain focused on rare earths, and our main project is now beginning to deliver results where I'm beginning to see a potential pathway to development. I think really those are the reasons why investors ought to look at heavy rare earths as an investment. We've got a very, very low enterprise value at the moment. I can't believe it, to be perfectly honest. It is what it is. So there's a lot of potential there for share price growth, just on the basis that we've done so much work in the year since we listed, where our enterprise value at listing was so much higher than it is today. It kind of doesn't make sense, to be perfectly honest, but the market is what the market is. So I ask investors to take a good look at us and look at the progress that we've made in the past 12 months, with some more announcements coming by the end of the year, as I outlined earlier.
Okay, fantastic. One of the funny things, the market has made a lot of companies like yourself almost, well, not say risk-free, but take a lot of that risk out by having you down at such a low market cap, enterprise value, as you said, just by virtue of the market price dropping the way it has, right? So anyway, that's, kind of what it is with the market. And I think that's one of the interesting things, is that the good projects hang around and those tend to not, is my opinion.
I have said to our board, who didn't have exposure to rare earths before picking up the kaolin project, I have said to our board, the most important thing is that if we show positive results and progress, real progress towards a development, and both the chairman, John Byrne, and I are very strongly aligned on this. We want to be able to demonstrate progress towards the development of a project. That's what we want to be able to do. But we both also understand it is a slow burn, and the most important thing that I've probably said to our board is that we've got to stay in the game. You can't go to ground. It's like football. Don't go to ground when you're in the contest, right? Unless you're injured. Yeah. We're not injured. You know, we're actually injecting ourselves into the game now, and it's just taken us a little while to get there, and I haven't been prepared to do that until we've got the sorts of results that justify it. And we're now seeing those results come through in the form of metallurgy, which is a very, very important part of the project development, to the extent that I see a potential pathway towards development.
Look, I've seen some consistency in the stories that have been coming to Samso on this sector, and I think you're on the money. You know, it's just a matter of time, and once the Met issues are cleared out, because we've always said the Met issue was the key component. Once we have that understanding, we know that it works. It's just fiddling around like every project is, whether you're a gold, nickel, whatever. It's all about trying to get that cost balance right, and voila, you know. And mining these kind of stuff is probably the cheapest component of everything, I guess.
Yeah, that's right. And and of course the other half is when it comes to the clay hoser space, as I said earlier, you know, you're going to need some tons. You know, because we're starting at a relative disadvantage compared to our hard rock colleagues and the Chinese themselves insofar as cost is concerned. Okay, so that be that as it may, we've got to show capacity, as do all of us, to show tons that can go through a mill to produce enough rare earths to be noticed by people who are prepared to sign offtake agreements or provide funding. So, you know, we're working towards that as well at HRE, and many others are trying to do that as well.
Okay, Richard, thank you. As we always do, we give away coffees, and this is helped to us by Florence Drummond, who there's a group called KIC, where they are Indigenous business supporting our industry, and they're kind enough to support us by giving their coffee away for free. And I've been known they are very good coffee, and I've been told, I should say. So thank you again. Thanks for your time, and we'll hopefully follow the journey and keep keeping you guys out there updated, and follow the journey to, you know, your production.
Thanks very much, and I really appreciate the opportunity, and thanks to KIC as well for making the coffee available. I've just noticed there it's called Kickstarting Your Projects. That's fantastic. I can't believe that you've come up with a sponsor that has that sort of byline, or did you bring that in there yourself?
Just the Samso way, mate.
Fantastic. Thanks again, I'll really appreciate it.
Okay, thank you.